Welcome back. Today on the Byte-Size Brief, we're going deep on Hims& Hers Health, ticker HIMS. Now, this is a telehealth company that has become a true battleground stock. Seriously, it's known for just explosive growth, a business model that's really poking big pharma, and honestly, some of the most dramatic stock volatility you are ever going to see in the market today. Okay, let's get right into it. And look, this right here, this tells you everything you need to know. In just about a year, the stock went from a high of around $73 all the way down to a low of about $14. Now, that is not just normal market swings. No way. This is the signature of a company at a huge inflection point, caught between a massive opportunity and some really significant risks. And that's exactly why so many investors are watching it like a hawk right now. So what's behind all this? Well, at its core, Hims & Hers really sees itself as an intentional disruptor. This quote from CEO Andrew Dudum, it's not just some corporate tagline, it's practically their mission statement. They've built their entire brand by putting direct, and I mean direct, pressure on the established healthcare system, using their growing base of millions of customers as leverage. This super aggressive strategy, well, it's both their greatest strength and their biggest vulnerability. To really get the full picture here, we're going to break it down into 6 key parts. We'll kick things off with how the company even got here. Then we'll peek under the hood at its core business model. After that, we'll unpack the high-stakes drama around those weight loss drugs, lay out the bull and bear cases, and finally, take a look at what's coming down the road. So, first up, let's look at how Hims & Hers got to this crossroads in the first place. It started out kind of like a lifestyle brand, but has morphed into this fully vertically integrated healthcare provider, which has put it on a direct collision course with some of the biggest companies on the planet. All right, so let's get past the headlines for a second. How does this business actually work? How do they make money? Let's take a look at the engine of the company, its subscription machine. You know, the best way to think about Hims & Hers is kind of like a Costco or a Netflix, but for your health. It's pretty simple, right? Just like Netflix curates movies for you or Costco curates products, Hims & Hers curates healthcare. You pay a recurring fee, and that unlocks access to doctors, personalized treatment plans, and medication delivered right to your front door. The whole model is built on that recurring, predictable revenue stream. And this is basically the customer journey. It's a simple 3-step process, and it's designed to be as smooth and frictionless as possible. It all starts with an online consultation with a real licensed provider. Then, based on that conversation, a personalized plan is created, and a lot of times they use their own unique formulations. And finally, step 3, the medication is shipped discreetly to your home, and it automatically refills each month. This vertical integration is key. It gives them total control over the entire experience, from start to finish. Okay. Now for the main event, the company's super aggressive push into the GLP-1 market. That's the class of drugs used for weight loss, including household names like Ozempic and Wegovy. That is the single biggest story here. It's what fueled that insane stock run-up, and it's also what triggered the crash and all the legal and regulatory battles that followed. This timeline really just captures the wild roller coaster ride they've been on. In early 2025, Hims & Hers very cleverly used a regulatory loophole, the FDA's official drug shortage list, to sell what are called compounded, sort of generic-like versions of GLP-1s, and business just exploded. But that brought a ton of scrutiny, including reports of issues at some of their facilities. Then came the turning point in February 2026. The FDA closed that loophole, and Novo Nordisk, the maker of Wegovy, sued them. Just when it looked like they were in real trouble, Hims & Hers pulled off a stunning reversal in March, announcing a partnership with the very company that was suing them to sell the official branded Wegovy. I mean, what a wild turn of events. Okay, so with all that drama as the backdrop, let's actually build the bull case. Why are so many investors still incredibly optimistic about this company? Well, the argument is that the whole GLP-1 saga, while it was a big deal, is just one part of a much bigger, more durable story about the power of their platform. And it all starts with this number right here, 2.51 million subscribers. This is the bedrock of the company. It's a massive, engaged user base that generates reliable, recurring revenue month in and month out. For the bulls, this subscriber base is the company's single most valuable asset, period. And that huge subscriber base is driving some really incredible growth. I mean, just look at the revenue jump in the fourth quarter of 2025, up over 28% from the year before. This is not a company that's slowing down. It's a growth machine that is successfully scaling its platform and turning users into loyal, paying customers. Plus, the bull case points to some really smart diversification. Hims & Hers is moving aggressively beyond just their initial focus areas. They're expanding into massive markets like hormone health, launching diagnostic services with their labs feature, and even getting into preventative care with cancer screening. And with the acquisition of eucalyptus down in Australia, they're proving that this model can work on a global scale. This is not a one-trick pony.
And finally, the bulls will definitely point to their technology, specifically their MedMatch AI. And look, this isn't just a gimmick. It's a real system designed to analyze patient data to create more effective, more personalized treatments. The whole goal here is to improve patient outcomes and boost retention, creating a kind of technological moat that competitors are going to find really, really difficult to copy.
But of course, there's always another side to the story. For every bull, there's a bear who sees significant, maybe even company-threatening risks on the horizon. So let's break down that argument now.
The bear case really comes down to three big pillars. First, the regulatory environment has clearly turned against them. That super profitable compounding loophole they were using, it's gone, closed. Second, competition is heating up a lot. And third, there are some signs of financial pressure, with heavy spending on new stuff and a recent revenue forecast that definitely made Wall Street nervous. And this table lays it out perfectly. They're basically fighting a war on three different fronts. They're going head-to-head with direct competitors like Roe. They're fighting Big Pharma, which is now launching its own direct-to-consumer platforms like Lilly Direct. And then you have the looming threat of big tech, with giants like Amazon using their unbelievable logistics and scale to jump into the space. That is a really tough set of opponents.
And this specific number is so important for the bears. The company's own forecast for the first quarter of 2026 came in way below what analysts were expecting. This created a ton of short-term uncertainty and raised a critical question. Now that the compounding loophole is closed, can Hims & Hers actually execute on its new strategy with the branded GLP-1s and still maintain that super high growth rate? The market, well, it's not so sure anymore.
So, you have the powerful bull case and the very compelling bear case. Where does the company actually go from here? Let's look at the key signposts on the road ahead that are going to tell us which side is winning this argument. Here are the four things you've got to keep an eye on. First, the Q1 earnings report on May 11th. This will be our first real look at how that new Novo Nordisk partnership is working out. Second, watch for the rollout of their new AI tools later this year. Are they for real? Third, how well are they integrating that big international acquisition? And finally, the most important metric of all, are they still growing that subscriber base? And, this is key, are they successfully moving those customers to more profitable, personalized plans?
At the end of the day, it all really comes down to this one question. Is Hims & Hers actually building the future of consumer-centric healthcare, a platform that truly empowers patients? Or is it a cautionary tale of a company whose aggressive tactics and reliance on a regulatory loophole just led it to fly a little too close to the sun? 2026 is going to be the year we find out. That wraps up today's deep dive on Hims & Hers Health. For a sharper, more candid discussion, join us on the full audio podcast. And hey, drop your questions and takes in the comments. We read every single one.